Hey, are you ready to know the direction of the day for the world's most traded pair, the Euro USD? Thank you guys for joining me. Thank you for joining me on this beautiful day, the 20th of August 2024. Right now it is 8:30 a.m. my local time here in East Africa, and if you're using the New York time, I believe it's exactly 1:30 a.m. So thank you guys for joining me every Monday to Friday. I jump onto these live streams to basically share what I believe is the direction for the day on the world's most traded pair, the Euro USD. So I use my 50% win rate strategy to basically be able to determine the direction or the bias of the day USD. Now, with this particular strategy, which is a 50% win rate strategy, it has a 1 to 4, or it gives me a 1 to 4 risk to reward ratio that enables me stay profitable in these markets as I trade. So if you are looking for a strategy to trade, definitely you could use this as well, because I'm going to be sharing everything about this particular strategy right here on this live stream. So be sure to stick around as I share exactly how I trade this particular strategy. And maybe if you're looking for a strategy, this could be one of those that you're going to be using, because I share it absolutely for free. I will not be charging you anything about or for this particular strategy. I'll be able to share the ins and outs of this particular strategy for you to be able to trade exactly the way I trade this strategy. So thank you so much for whoever is joining right now. I greatly appreciate you taking time and joining me on this beautiful Tuesday morning. Now, if you're out there and you are someone that maybe sometimes hesitates to put on that trade, then you are someone who does not trust your strategy or method. You do not trust your strategy. So what I advise you to do is for you to actually go back test enough, back test that strategy. Get to know the ins and outs of that strategy, the conditions in which this particular strategy works, and then once you've collected all that data, this is when you're going to come back into the markets or into the live markets, and then you'll be able to execute religiously on that strategy. When you're trading, it is like a game. You must play this game. You must play, this game of probabilities. It is a game of probabilities that you must always play for you to be able to, have your edge play in your way. Because if you do not, or if you miss out some of the trades, then definitely you will not be profitable using that particular strategy. You can't pick and choose some of the trades you're going to take and some others that you're not going to take using your same exact strategy. You can't do this. You must be always available to play the game of probabilities using your particular strategy or edge in the market. So that's my word of advice to you. Hope you take this. Hope you go and win using your particular strategy in these markets, guys. So getting back to what I believe the direction of the day is going to be like. Now, for me, with this particular strategy, I'm able to, determine the direction of this particular day using the previous day's candle. My strategy is basically built around the previous day's candle. On that previous day's candle, there's always what I like to call an area of interest that basically price leaves on the previous day. So this area of interest can either be an order block, it can be a fair value gap, it can be an equal high or equal low. So basically, these are areas I look out for, as price always likes to tap back into these areas to basically generate some liquidity, and then that's when price turns in the other direction. So you might find yourself being taken out sometimes if you are lying within these areas, or if you have any stops resting within these areas from the previous day. You might find yourself being taken out. So this is the strategy I utilize to basically, take out people's stops that are resting in the market. So this is how I trade, and it is a strategy that gives me a 1-to-4 risk to reward ratio, and this enables me stay profitable in these markets. But before I even jump onto the charts, usually there is some kind of routine I go through, and the first thing I always do is actually, see what the fundamental side is saying about this particular day. And the website I like to use when it comes to this is this particular website called Bloomberg.com. So I'm going to be sharing my screen right now to be able to show you exactly what I'll be seeing on my end. Let me try and share that right now. So you should be able to see my screen right now. So the website is this right here. It's called Bloomberg.com. Now, this website basically shares what the news on the particular pair is. So for me, I trade the Euro USD, so I'm able to check out what the related news on that particular pair is going to be like, or what the related news on the particular pair is like for today. So today so checking out the related news, or if you do not know how to get to this particular page, all you need to do is go to Bloomberg.com, and then once you're on Bloomberg.com, you come under the markets tab right here, and then check out currencies. From there, you're able to select out the particular currency that you trade. For me, it is this particular currency, which is the Euro USD, and this is the related news on the currency. So this is about China. I'm not interested. Our stocks see best week in 2024. Okay, that's Bloomberg reporting. This was updated 5 hours ago. So this is good for the US dollar. So options traders hedge for dollar losses ahead of Jackson Hole. Now, guys, for me, I'm purely a technical trader, but the only reason I look at this fundamental side is basically to see if there's any major news. Guys, keyword there is major news. If there's no major news on the Euro USD, then I'm not, I'm not concerned at all. So all I'm looking out for is the major news. If there's nothing major, then I'm not concerned with that particular news. So when you see right here, yen rallies against dollar, outstripping most of its G10 peers. Defense stocks fall as Germany plans to reject Ukraine aid requests. Okay. So basically, there's nothing major here. If we consider major news, this is nothing major. So there's nothing like major news here. So I'll not be concerned about that. So then next I go to this particular website, which is forexfactory.com. I use their economic calendar. And for me, how I filter this out, I filtered it to only be displaying or showing me the red folder news events. So if there's nothing like red folder news, then it won't show here. So this is how I filtered it out, because the reason I like to filter out red folder news events is that most of the times with the brokers that we use, these brokers, as these red folder news events are dropping, usually they widen their spreads. And if you, let's say, predetermined to maybe lose, or if that particular trade goes against you, if you predetermined to lose maybe 10 pips, these brokers sometimes end up slipping you maybe 10 pips or 15 pips more. So for you to actually avoid this, in my opinion, it is better to be out of that trade by the time this news drops. So you don't want to lose more than you actually early anticipated. So the best thing to do is for you to actually be out of these markets as this news drops, because if it goes against you, you might end up losing more than you actually earlier anticipated. So this is just me. It's how you can take it or leave it, but for me, it's just how I trade. So basically, this is it with the fundamentals for today. So I've basically checked, and you can see on 20th right here, there's nothing like a red folder news event. So I'm not concerned at all when it comes to this. So then after looking at all this fundamental side, this is when I jump onto the charts. So you can see my chart right there. So this is how it looks like for today. And with my strategy, it is a strategy that utilizes the previous day's candle. So this is the 1 hour time frame that I'm on. When you look at yesterday, which started happened exactly here, it formed its low right there, then its high was right there, and then it was able to close right there. So that's the previous day's candle. Generally, this is the previous day's price action. It was very bullish yesterday. So so this is what we had for yesterday. So what I'm looking out on this previous day's price action is for any areas of interest around the previous day. And what I like to see here amongst those areas of interest are either fair value gaps, an order block, or maybe equal highs or equal lows. So these are my main areas of interest when it comes to this. So you can see right here for the areas of interest there, there's a big fair value gap here. And lastly, the lowest fair value gap is right here. So I would expect price, for today, what I'll be looking at on this lower side, I would expect price to come all the way down here, fill this level. So I would expect price to either come all the way down here. Okay, so that level is 1.10277. So this is what I expect price movement to be like. So I would expect price to move all the way down here. And then once it has gotten to this level direction. So if you're someone, for some people, they like to catch this move. So if you like to catch this move, you can go ahead and catch a particular move. Then for the upper side, this is what I'll be looking at. You see this high right here, this high for the Asian session today. This is what the level the other level I'll be looking at, because this particular high already all the way up here. So this is what I mean. Price comes all the way up session, and then once it has done that, I would expect price to reverse in this other opposite direction. So so these are the two key areas I'm looking at, either price coming all the way to 1.10876, and then once price has taken out that particular level, then it reverses in this other opposite direction. So what am I going to do? So once price gets to either this level or this particular level right there, once price gets there, then the thing I would be looking to do is actually drop down to the 5-minute time frame. And then on the 5-minute time frame, this is where I actually look to take my entry. So how I like to enter is basically waiting for price to form what I call an inversion fair value gap. Now, if you don't know what this exactly is, for example, on this very time frame, let me try and zoom in very well here for me to show you what I call an inversion fair value gap. So you can see right here, we had a fair value gap that was initially here. There was a fair value gap right here. And you can see what price did. This big candle right here, it came and a fair value gap. So so there was a bullish fair value gap here. I was able to cover this fair value gap that was existing here. So that covering is what I call an inversion fair value gap. So basically that's what I'll be looking out for on the minute time frame. So basically, when price gets to this, to take out any of these levels, I drop down to the 5 minute time frame, and then this is where I actually look out for these inversion fair value gaps, and then I'm able to take my trade. So when it comes to the uh, to the stop loss, I always use 10 pip stop loss. And then when it comes to the take profit, I always use 30 pips as my take profits, but my take profit. But I like to actually squeeze this to a 1 to 4 to be able to basically make some extra profits from these markets. So basically, this is how I trade. It is how I trade this particular strategy. So, but you do not have to take my word for it. The reason I use these 30 pips, it's basically because on average, from experience over the time I've traded the Euro USD, I realized that on average it actually moves at least 30 pips in a day. So knowing this at the back of my mind, this is how I was able to determine the 30 pip take profit from the Euro USD, but you do not have to take my word for it. You can go ahead and backtest this particular, strategy. Go look at it very well. Once you're confident with it, then this is when you can go ahead and start executing on this very particular strategy. So basically, this is what I'll be looking out for today. Hope everything goes right. Hope everything goes just the way I've predetermined, or how everything has been said right here on this live stream. In case you do have any questions, you can go ahead and leave those questions down in the comment section. I'll be gladly answering you back. And remember that as you're trading, guys, I repeat, do not over leverage on your trades. Don't over risk, guys. This is not a 1 day thing. Don't think that that particular trade that you're putting on is what is going to make you rich, or it's what is going to enable you, pass your challenge. Don't go YOLO on these trades, guys. Try and minimize your risk. Try and be within, risk within your limits. If let's say the risk calculator says you should risk maybe they said one lot, let it be one lot. If it's 5 lots, let it be 5 lots. If it's half a lot, let it be that, guys. Do not over risk, because as you're over risking, you actually putting yourself into deep drawdown in case that trade goes against you. Look at this as a long-term thing, guys. Do not think that particular trade you're putting on is what is going to be a winner, or it's what is going to, get you out of your situation. This is not how you should be looking at trading. Trading should be something for the future. You should be looking far ahead of the time. So how you evaluate yourself, it shouldn't be on that one trade. It should be, let's say, after 10 trades, you evaluate yourself. After 20 trades, you evaluate yourself. Maybe after a month, you evaluate yourself. After a quarter, you evaluate yourself. After half a year, maybe you evaluate yourself after that time period. So this is how you should be trading. You should not be trading, based off of you or your emotions. Something tells you this trade must be a winner. So it should all be data based, guys. Don't think for the market. The market can go any direction, but what you need to know is that over a number of trades, your edge must be able to, be on your side. So for me, it is this particular strategy I trade. It is a 50% win rate strategy. So what does that exactly mean? It means that after every 10 trades, at least I know 5 of those trades must be winners. So this is how I approach this. I'm not evaluating myself maybe on that one trade that I'm going to take. I don't do that. I know that it can, whichever trade that I put on, anything can happen. It can be a winner or it can be a loser for that case. It can be a loss or win, no matter what it is. But I know that after maybe 10 trades, 5 of those trades should be on my side. And with the 1 to 4 risk to reward ratio, definitely I know I'm going to be staying profitable in this market. So basically, this is how I approach this, and it's how I've approached this for the longest time, guys. So try and get those good habits into your trading regimen, and definitely, I'm sure you'll be able to turn profitable. So this is it for today. I'm hoping that you're going to stay, winners. I'm hoping that you're going to stay with those good habits that you've developed. And then once you are on this, definitely you'll be able to stay profitable all year round. So this is it for today. Hope you guys found this very helpful. In case you did, please go ahead and give this video a like. You can as well share this live stream maybe with a friend that struggles with daily bias. And as well, do not forget to subscribe to the channel, because this really helps out the channel. Thank you guys. I wish you a very good trading day. Bye.